Ladies and gentlemen, welcome back to another Bitcoin video. Now, this is actually a Bitcoin and cryptocurrency video because the first part of the video, I'll be discussing short-term price action on Bitcoin, a breakout we've seen above a pretty decently, valid resistance line. We've seen that breakout. We're heading upwards now on Bitcoin. What is that short-term move going to constitute? Where are we going to go? That's one topic. But another topic I'm going to talk about, and this is multiple topics actually, is answering 10 important community questions submitted by you guys. When should you accumulate altcoins? When is Bitcoin all-time highs going to come in, based on the data? Is the 4-year cycle still valid? Will it end? Will it ever end? How is the Israel-Palestine conflict going to affect cryptocurrency and Bitcoin? 6 more questions after that. They're all very important. Go to the timestamps of this video and skim through the timestamp questions. You'll find my answers within those timestamps. Guys, very important one today because it's covering a kind of broad variety of questions, all of which are extremely major. Perhaps one of the most informative videos I've made in probably a couple of months at least. So guys, check out this one, stick to the end. Thanks for watching in advance. Leave a like, leave a comment, help me out. Let's get into it. Okay guys, in today's video, I'll be briefly looking into the short-term price action changes, looking into the daily chart, looking into the hourly chart on Bitcoin. We have seen a little breakout in the hourly chart heading towards the upside. But then after that, I'm going to dive straight into the most important chunk of the video, which is the questions. Now, you might think, oh, this is going to be a vague video. It's not going to be vague. I promise you, this is going to be one of the most informative videos I've made in a couple of weeks because we have so many different questions about Bitcoin. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 questions to answer, and I'll answer all those to a reasonable amount of depth. So go ahead and check out the timestamps in this video. I'll post the questions in the timestamps, and you can skip through the questions that are relevant to you, or you can just watch the whole thing. I think it's useful to do it both ways. It's up to you. So guys, without further ado, we'll get into it. Before we do so, check out the crypto VIP group we have on Telegram. So this is Wolves of Crypto VIP. On Telegram, we have the prices available here. We have what you get for joining the group available here in this photograph, as well as the payment information. We have a 14-day free trial, up to 30 days free trial if you deposit 500 USD into an exchange. And then also we have the results for Q3 that have just released, and we have about a year of results for VIP trades in there with an 80% win rate. So absolutely amazing stuff. Go ahead and check that out. Guys, without further ado, let's dive into the content. As I said before, we're going to start out with the daily chart and 15-minute and hourly chart, just very briefly giving you an update of what's going on. We know, I'm not going to go through the whole rigmarole, but I'm going to tell you just briefly, we know what Bitcoin is doing here on a macro scale. We know that it's between these two red boxes, the red and green box. The one over here and the one over here, 32K and 24.5K. This is the range we've been seeing on Bitcoin. That range has been active for over 6 months, going on 7 months now. We're bouncing between those two levels. Until one of them breaks, nothing changes on macro. We need to break 32K. We need to break 24.5K for a macro change to occur. We have the dividing line in the center of the range, dotted red line here at 28K. 28K is very important. If we break 28K, it becomes very likely we retest 32K. And if we break 28K, a 32K retest will become very likely to break to the upside, since that will be the third retest of the 32K region. Hope that makes sense. Basically, it's very unlikely that you see a triple top. Triple tops very rarely happen. So if we break 28K and we re-enter the top of the range, Bitcoin becomes, pretty likely to start aggressively attacking 32K for a bullish break. Right now, our objective on Bitcoin is to definitively break 28.6K. That's our objective. Right, and we're struggling to do so, I will admit. We are still on an upwards trend on a local scale, and by that I mean we're seeing higher lows, okay, and higher highs. So we are technically in an upwards trend, and we have seen over the last 12, very briefly actually over the last few hours, we've seen a break of this descending resistance line you see in yellow over here, and we've seen that line be validated in the fact that when we saw the breakout, what did? We came back down and retested the breakout line. After a brief rejection from 27.3K, but I think it's pretty likely that Bitcoin will get above that 27.3K level, and in that case, it will break out of this cut pattern and start attacking that 28.6K level once more. So we need to see that 28.6K level break. We are in the middle of a little breakout forming here. Hopefully it develops into something bigger, and that's something we can discuss tomorrow when the chart has developed a little bit more. But until then, we're going to leave that there. That is the short-term update, and we'll discuss that a bit more tomorrow. Now we can get into the interesting part, the questions. So this might come across as slightly disjointed. That is because I'm going to be jumping between so many different topics in these questions here, but I'm just going to get into it. And I think every single bit of this video is going to be quite useful. So let's get into it. All right, so first question. Just came across something interesting. Maybe you can look at it. The bear market bottom to the breakout of the accumulation peak is exactly 101 weeks. So from this, we should break 32K 101 weeks from November. Thoughts? All right, so let's see what he means here. So I think there's a bit of confusion in his question. I don't think he means break 32K in 101 weeks. I think what he actually means is break all-time highs in 101 weeks, because that's what's happened in the past. So he's correct in saying that's what happened in the past. If we look at these red dotted lines, as you can see, these red dotted lines are drawn at previous all-time highs and they extend across. So these are the 3 all-time highs we've seen on Bitcoin. And if we mark from the bottom, right, the bear market bottom, to a break of that all-time high, you can see it takes roughly, okay, 101 weeks, well, exactly 101 weeks in 2016 from the bottom. It takes, of course, again, pretty much exactly 101 weeks here in 2018 to 2020. And based on that, this is what he actually means, right? Based on that, if we see another break of all-time high in 101 weeks, just like what we saw in the last 2 cycles, we would be seeing a break of all-time high on Bitcoin, 101 weeks. It would take us to around November next year. Now, this is something that we have discussed before. We have discussed the probability of a November all-time high break next year or before November next year, and that is based on what I just showed you. That is what he's referring to. So yes, there is a developing trend. It's not quite a trend yet, because obviously we need 3 data points for a trend, and we've only seen 1, 2, okay, 3 data points is needed for a trend, but there is a developing trend that seems reasonable enough. That brings us to the conclusion that Bitcoin will break all-time highs in 101 weeks from the bottom, which would be around November next year. That seems reasonable. So in about a year and 1 month's time, we might be breaking all-time highs. That's what he means by the question. Thanks for the question there. Just put some clarity on that, because I think you're slightly confused by 32K. You clearly mean November next year all-time high. There is a lot of talk about this being the last bull run for Bitcoin before an extended reset. That would obviously break the 4-year cycle. Have you heard this, and what do you think of the argument? Yes, I have heard this, and I think you already know what my answer is going to be. It's a very straightforward answer. I think it doesn't matter what people think. I think what matters is what happens in the charts. Very simple. I think the speculation about the end of the 4-year cycle theory, based on various predictive methods, are not based in reality, because they are not based in the charts. They're based on speculation. The charts have no, you could say TA is all about speculation, and you're correct to a certain extent, but trends aren't speculation. Trends are observations of reality. Right now, the only observation of reality we have is that the trend is active, and hence we can only assume that the trend will continue until it does not, or at least until we see a crack in the trend. I mean, there's really no crack in the trend at all. Everything we've seen so far is completely natural as per the trend. Now, if we start dropping below things like, I don't know, 24.5K, we start dropping below things like even 18K, then you can start thinking, okay, 4-year cycle's in danger. It's not meant to be doing this. We shouldn't be seeing this. Therefore, we can start to consider some alternate realities. But right now, we are, basically double from the bottom. I mean, I don't know what the whole, the game plan here is for people saying it's going to end, it's going to end, it's going to end. Wait for the data to come in, wait for the evidence. There's no evidence at the point in time. So what are you reacting based on? Are you reacting based off blind thoughts? Your thoughts mean nothing. What matters is what happens in the chart. So that's my answer. Until something cracks, until something, suggests otherwise, which really nothing is doing right now, then I'm going to believe in the 4-year cycle. And I think that's what everyone should do, because that's how it works. That's how the whole mindset, the whole, what can you say, the whole thought process of a trader, of an investor in a financial market, that's how it should work. That's the only profitable way you can think. As soon as you start trusting things that aren't the charts, you're done for. And the reason being is because things are reflected in the charts. It's not like things are just going to randomly happen. There's only very, very few occasions in the history of the markets where a genuine black swan event has occurred. 2020 was one of them. Other than that, I mean, there's been no major black swan event. 2020 is literally the only time I can point to be honest with you. So, trust the charts. That's my response. At what point would you start to accumulate altcoins? Now, this is a great question. I have answered it a few times in the past. Perhaps I don't answer it enough, because there's obviously new people who come to your channel, or people who miss the videos in which I do answer it. But I have been very clear for about a year and a half, about 2 years really. I mean, ever since the end of the last bull market, I've been extremely clear. I won't be buying altcoins until post-halving, and probably months after post-halving. Now, why do I believe that? Well, it's actually very simple, and it's very logical, all right? I'm not saying that you can't find exceptions in the altcoin market. What I'm saying is Bitcoin outperforms altcoins until months after the halving. And this is a reality. It's not debatable. It's just a fact of the matter. That's what it is. So We've got the Bitcoin dominance chart here to briefly display this. I could do it much more in depth with much more precise information if I took more time to do it, but I'm just going to use the Bitcoin dominance chart because it's the easiest way to explain the situation. Bitcoin dominance chart currently is sitting at 51%, meaning that 51% of the money in cryptocurrency is in Bitcoin and the rest is in altcoins. So the higher Bitcoin dominance goes, the more Bitcoin gains percentage stake of the market, and hence the less money is in altcoins. So what we see generally is during crypto bull markets, all right, when the market's rallying, the market's pumping, as you can see in 2020, Bitcoin dominance sharply declines, and during Bitcoin bear markets, Bitcoin dominance pretty much rises very rapidly. Now, this is because during bear markets, people are scared of the market generally. They're scared of the market because there's less returns. They're not as hyped as they were. They're not as risk averse. They're more risk averse, I should say, and hence they flock to Bitcoin for safety and security. During the bull market, they flock to altcoins, right? They sell their Bitcoin, they go for altcoins because they get greedy and they see the market's pumping, they don't want to miss out. It's very clear logic behind it. Right now we're in a bear market. Bitcoin dominance is rising once more, which means that the trend we've seen in the past is very much true. This means that Bitcoin is gaining dominance in the market. It means that Bitcoin is outperforming altcoins consistently. And if we're looking at the last cycle for any sort of measurement of when it should change around the halving. We saw that, well, to be honest, yeah, it should change around the halving. That's simple. Well, after the halving, really. The halving was in May 2020. All right, that's the pink line. That's when the halving was in the last cycle. Now, you can see, yeah, we had brief declines, but realistically, it was nothing major. The real decline started, okay, after we saw the first major impulse of the bull market, which ended in around December or January 2021, December 2020. That's when we saw Bitcoin dominance really start to drop from there. So my answer is this. After the first major impulse of the bull market, or just when we see Bitcoin dominance consistently drop for a decent period of time, that's when I'll start to pick up altcoins, because that's the only time in which altcoins will gradually start to outperform Bitcoin, and hence it's the only time in which it will be favorable on a generalized scale to invest in altcoins. It's just following what the market says. Now, that doesn't mean you can't find exceptions. Of course, there's going to be altcoins that outperform Bitcoin during this period. Of course, there's altcoins that have outperformed Bitcoin during this period. The fact of the matter is, it's less likely to occur. It's not the trend. When the trend becomes altcoins outperforming Bitcoin, that's when I will shift my investment strategy. You have to understand, and you will understand this based on what I've said already in this video, everything I do in this market, every reaction I take in this market is very much trend-based. It's very much trend-based. I follow the trends because the trend, it's like a river, right? Follow the flow of the river. If you're investing in altcoins now, you're swimming against the river. Yeah, there's a chance you're going to get to the riverbank, right? Of course there is, and you might actually do so. But the point is, it's not favorable. It's much harder. It's much more difficult, and it's much more risky. So why? You know, like I'll just follow what the market says. Now, that's not to say that I'm not going to buy altcoins until this occurs, until the top and Bitcoin dominance occurs. I probably will. I'm just being honest with you. I probably will find a few exceptions. But it's just not my priority right now. So yeah, that's my explanation there. I think that makes a lot of sense. You have to remember as well, right? I'm a trader. I'm constantly trading altcoins. So it's not like I'm not touching altcoins at all. No, everything I touch is altcoins. It's just I'm not looking to buy altcoins for holding, really. Best long-term entry point from now on. What is the level? 28.6K, 31 to 32K, retest to support something else. So he's asking, when should you buy Bitcoin, assuming you haven't already done so, or when should you add to your Bitcoin bag? Now, the key word here is long-term. Okay, you said long-term, so I'm going to treat it long-term. Right, 28.6K breaking realistically is a decent level for buying, but I wouldn't say that's a long-term level. It's not a macro level at all. The next macro level, right, that Bitcoin needs to break, okay, would be 32K. Once we break 32K, we're getting above the green range here that I have on the screen that we've spent 7 months in. We're getting above that green range finally. After 2 rejections for resistance, we're finally breaking above it. And it's very likely we see some sort of resistance support flip from there. And it's very likely, well, this is what would happen. It's the reality that we would re-enter, all right, the price range that we saw the vast majority of the bull market take place in. That's where the vast majority of the volatility over 2021 and 2022 took place. So if we break above 32K, we're re-entering that range, we're flipping this range, and we've got multiple buffers at that point until the low of 15K. So breaking above 32K would, technically speaking, be the next macro buy level, because it's the next macro resistance, and you always buy above resistance, so that is the reality. So yeah, 32K. But I do want to quickly note that answering questions like this, it's very difficult to be very specific, because I don't know your personal circumstances. I don't know what you're actually looking for. I only know what you're going off when you're typing, and I'm also applying my own logic to the situation. So realistically, buying and selling is quite subjective, but that's what I would personally say based on my investment strategies and my interpretation of what you mean by long-term. When you open a trade, for example, a short position, but you start to see a trend start to go bullish, is it okay to close your position to minimize your risk, or should traders see their trades through? Okay, so you should never stick to a plan just because it's a plan, right? Just because something is a plan, it doesn't mean it's correct. You should never stick to it. You should always be reacting to the market as it develops, always react to the situation as it develops. Now, that doesn't mean, because there's a very fine line between reacting to the situation and being overly emotional. If you enter a short and you see, a couple green candles, it doesn't mean the short's a failure. Not at all. You should be trusting your stop loss to a certain extent. But if you enter a short and you start to see things you didn't see before you entered the short, you start to see Bitcoin doing something, you start to see the market moving, you start to see some news articles come out, something like that, something major, then yes, of course it's okay to cut your trade, because the trade's not profitable anymore, it's not favorable. You just have to learn, as people say all the time, you have to learn to separate emotions from logic. As long as you're being logical in your decision, as long as you can justify your decision, as long as your decision makes sense, you can do whatever you want. There's no reasons why you should be locked in a trade. It's not a prison, right? You can do whatever you want. Now, we've got about 5 more questions. Before we get into them, I'm going to check out the Bitget and Bingx exchanges.
Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have 2 exchanges for you guys, 2 options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. Very low fees, protection fund, the whole 9 yards. We've also got Bingx, that's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right, with a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up, use my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on a good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video.
All right, welcome back. Do you think that the Israel and Palestinian conflict will have an impact on Bitcoin and cryptocurrency in general? I think that right now the conflict is very hard to predict. I think that right now the conflict is actually very, very small scale. Yes, there is a chance it develops into something bigger. But I think if you're looking historically, and this is not relevant to this conflict specifically, okay? But if you're looking historically, war is actually pretty decent for financial markets. Or at least it's not terrible for them. Because look, all we have to do is look at this chart here. This is a chart that shows you the S&P 500 and its returns basically during and 12 months later after a war, or after the beginning of a war, or after the beginning of a major event, I should say. And generally speaking, these major events could be seen as very, very bad on a public scale, on a sentiment scale, but they've actually not necessarily led to anything too bad in financial markets unless they've been directly financially related. For example, the oil embargo, all right, obviously financial related. And the canal crisis obviously blocked massive amounts of routes and everything like that. So, of course, those things were directly financially related, but they weren't actually wars. But if you look at actual wars, war doesn't necessarily... it really depends. I suppose the right answer is it's circumstantial, but not always negative. And given the fact that this situation is highly, highly speculative, no one really knows what's going to happen here. It's very difficult to have any sort of... any sort of understanding of what the effects would be on markets, let alone crypto, because crypto is only correlated to markets. So crypto, look, markets getting wrecked and the world being at war could actually be good for crypto. We really don't know what would happen. We've seen economic crisis be good for crypto in the past. Look at the last year. Look at what happened with the banks, at the start of this year, where crypto was rising massively while the markets were dropping massively. The traditional markets were dropping massively. There's so many elements of speculation that it's just impossible to say. Especially when you're understanding that, we have no historical point of reference whatsoever for what something like this would do to cryptocurrency. We just simply do not know. And then on top of that, we simply do not know what's going to happen in the situation with Israel at all either. So it's just like blind guessing. And I don't want to get into that territory of blind guessing, especially on something as highly controversial as the conflict we're seeing between Israel and Hamas right now. So no, I'm not going to get involved there. And also, I don't know. All right, next question. I don't know anything about trading. I would just like to accumulate some Bitcoin. Do you believe there will be lower prices to come, or does the price right now even matter if you plan to hold for many years? All right, here's something I want to say. The price always matters. The price always matters because the charts always matter and resistance and support always matter, all right? Even if you're going to hold for many years, your price always matters, right? You could say, I hear people say, oh, the price doesn't matter if you buy here at 27K or if you buy at 15K. It's like, yeah, you do. That's a double in price, so you half the returns. Of course it matters. It's stupid logic. Price always matters. No matter where you buy, it always matters. You have to be buying based off TA 100% of the time. You can't buy based off speculation. I don't care if you're a long-term holder, short-term holder, whatever. Price is always going to matter. Charts always matter. Saying things like the price doesn't matter because I'm going to hold forever is just an excuse not to learn TA, an excuse not to learn about the charts. And realistically, if you're willing to throw that much money at financial markets, you should be bloody looking at the charts, right? Otherwise, you're gambling. That's the simple reality. So, do I believe we'll see lower prices? What do you mean by lower prices? Do you mean lower than 15K? I think that's not supported by the evidence. So it's very, very difficult to answer that question because I don't know what you mean exactly. But yes, the price always matters, so get that out of your head. And I don't blame you for having that opinion. It's something that many people in the crypto space continuously regurgitate. Doesn't make sense to me at all. Am I too late? When people say take a trade at the break, does that mean when it goes a penny over, is there lower time frame analysis that should be done beforehand, say to avoid a fake out? All right, so first question, am I too late? I assume you mean, are you too late to cryptocurrency? There's no evidence to suggest that you were too late. Now, there is evidence to suggest that you've missed out on larger amounts of volatility, but let's be real, everything's a trade-off, right? With high volatility comes high risk. Just because Bitcoin's exceeded, it's very easy to look back with 2020 vision, hindsight vision, and say, oh, I should have invested. The reality is the only reason there was high volatility is because there was high risk. So, as I said, hindsight's 2020. It's very easy to look back and say things like that, but as of right now, even at the current state cryptocurrency's in, it's still the most volatile financial market that exists, pretty much. And especially with leverage, and especially when considering altcoins will continue to exist regardless of Bitcoin, there's always going to be opportunities. So no, you're not too late. That's a completely ridiculous thing to say. Even with Bitcoin, you aren't too late. Even if you look at the average returns annually for Bitcoin, the largest asset in the market, cryptocurrency market, even then you're not too late because it's still outperforming the S&P 500 by like 10x or more. Or I don't even know what the number is, but it's definitely massive. So no, you're not too late. And also, what do you mean by too late? It's very hard to... But when people say take a trade at the break, that means take a trade when there is confirmation of the trend being validated at the breakout, right? So you never really enter a coin at the breakout itself without doing some cross-checks. Is the RSI in bearish divergence? Is there a volume surge? Have you seen a resistance support flip? Have you seen a breakout of a trend line that validates the price line on the RSI? Have you seen, is there any immediate moving average resistance that you should be aware of? Like, bull market support band, for example. Or is there higher time frame resistance you should be aware of? There's many things you can ask. Is Bitcoin doing the same thing? Is Bitcoin still at resistance? There's countless questions you can ask. Now, not all of them have to be answered correctly, but you have to at least understand the situation you're getting yourself into. Sometimes breakouts aren't as simple as just getting above the price line and entering. In fact, most of the time, it's not that simple. Yeah, so that's why TA exists, right? Otherwise, people would just get away with drawing a triangle and trading and making money. It's not that simple. If it was that simple, the market would be free money, right? So yeah, it's relatively complicated, and there are things you need to look at. Some of the things I just mentioned are them. So yeah, just make sure you're getting that confirmation, that short-term TA as well. There's many complicated ways to do it. There's many easy ways to do it. One of the easiest ways to validate a breakout is wait for a resistance support flip of the breakout. But of course, in doing that, you might actually miss the breakout because you don't always see resistance support flips, and it might take a while. It might be more stressful. There's many different factors. So, it's hard to give you a precise answer on that point, but I don't think you should ever just trade a breakout based on the fact that the price has moved above a line. That doesn't make sense to me. No, not at all. But that certainly is a reason. All right, one reason to enter a trade. Of course, it's actually the most fundamental reason. But you should be looking at other factors as well. And the last question, when do you accumulate altcoins? I actually answered that in the middle of this video. So guys, those are all the questions we had. I believe that would be a massively useful video. That we answered 10 questions there, I believe, and all of which were very, very important. And actually, I could go ahead and do a video topic on each one of them, and I probably will, to be honest with you, because I didn't answer to the amount of depth I would like to answer on a lot of those. So I might actually go ahead and do separate videos on a lot of those questions. There will be more opportunities to ask questions like this in the future. Ask them below in this video, and I might actually answer them in the next video. We'll see. I'm always looking for questions, looking for video topics. Sometimes the price action gets a bit boring. It's very, likely for it's hard to find 20 minutes of content a day to talk about on cryptocurrency, and I try not to post when there's nothing to say. So it's good to have questions, because obviously you guys have more ideas than one person. I'm only one person, you guys are thousands. So go ahead and ask your questions below. Guys, thanks for watching. Hope you enjoyed. Check out the Crypto Academy if you want to learn how to trade. You want to learn how to gain the knowledge I have on the markets that I've demonstrated in this video. This is the way you can do it. The Become a Trader 10-unit course will teach you everything you need to know about trading, literally. The bio's on the website. The unit topics are on the website. We've got 140 students in there. We've got email address. You can throw us an email and ask us any questions, and ask for the payment information. We'll get back to you shortly. Guys, thanks for watching. Have a good one.